Australian investment bankers are facing a curious paradox. They're earning more money, but doing fewer deals. Despite investment banking fees jumping 14% to $2.1 billion in the first 9 months of this year, the actual value of mergers and acquisitions has plunged more than 16% to just over $64 billion, the lowest level in 5 years. And while there have been some promising signs, the failed $30 billion bid by ADNOC and Carlyle for Santos being one, the real problem lies offshore. Private equity firms worldwide are facing their worst fundraising drought in years, forcing Australian investment bankers to shift their focus away from buyout funds and back towards listed companies. Barclays affiliate Barrenjoey led the local banking table, according to LSEG, though the number of deals fell nearly 20% year on year. Macquarie topped the M&A league tables, while JP Morgan led in equity capital markets. It's a stark contrast to what's happening in the United States. According to the Wall Street Journal, American investment banks are firing on all cylinders, with Goldman Sachs on pace for its best year ever, and JP Morgan set to make over US $50 billion in annual profit for the second consecutive year. The Wall Street Journal reports that record high stock markets and a surge in AI-related infrastructure investments are fueling massive deals, including the biggest ever leveraged buyout of video game maker Electronic Arts. But there are warning signs on both sides of the Pacific.
A lot of investors are a bit confused on the state of the US economy right now. We do have an ongoing government shutdown, which means we're not getting a whole lot of economic data. But there is a very positive story you can tell, but also one of a weakening labor market and what that would mean for the Fed. We think it means the Fed is cutting a lot more.
Here in Australia, Citi's ANZ senior economist says rates aren't expected to be cut this year, with the labour market remaining tight. At the Wall Street Bank's investment banking conference in Sydney this week, executives pointed to weak productivity and high energy costs as the biggest impediments for business in Australia. So while the fees keep flowing, Australian deal makers are watching and waiting, hoping the global fundraising environment improves before the pipeline runs completely dry.